Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, so remember, we've got these tight bands that just continue to get tighter as we spend every day dealing with the green line here, the middle Bollinger Band, which is a fancy word for the 20-day simple moving average. What we've got this morning, though, is something a little more important. You got the Sunday open, which printed 30. We printed 30 overnight here. So you've got 24-30 matching lows. Yesterday, they took the market up right off the open. They rejected this morning high. They brought it back down through the weekly pivot, and it looked like they were going to lose it again, but they ended up holding it on the close. We've spent the entire night below the weekly pivot. So for me, this is a real opportunity for the bears. My biggest concern right now is this. You've got these matching lows at 24.30. Your daily midband comes in today right about here, 24.33. So right now, we are potentially in the process of trying to establish the daily midband as a higher low versus these matching lows. That puts the bears in a very vulnerable position, at least until they break 30. What the bulls want to do is get back up over 36 to take out the Globex high, 37.25, and get back through the weekly pivot. If they can do that, they can go after 41.5, 47.5. It all starts right here, though, with this higher low. What do the bears want to do? They want to hold it here. They want to hold at most 36. They'd like to turn it around here. They must break 30. They must break 30. They must stay below the weekly pivot. They must close again below the weekly pivot. And preferably, if they want to take control of the rest of the week, they need to close below the daily midband at 33. I don't think that's asking a lot. The bears have shown signs of life. The difficulty the bears have had is in sustaining what they've tried to take. Now, yesterday afternoon it got pretty choppy. It got pretty choppy. We spent the afternoon fighting over the weekly pivot. At this point, the room setup that we've had going since yesterday late in the day was short the weekly pivot, short from 38. We took some profits. We had to take more profits with all of this vacillating at the daily mid-band there, 33, 34. We still have a runner and we have our risk out, but so that's how we're doing it. But it's very hard for me not to tell people that if they want to be aggressive, they can get long against this daily mid-band, and that's just the theory behind that trade is just here we go again. More in this market happens because the weak shorts get into the mindset of, here we go again, because the dip buyers are going to come in. You don't get dip buying like this that's been consistently successful, and it doesn't go away in a day. It doesn't go away in a week. It doesn't go away in a month, because every time the dip buyers get involved, within the next 36 to 48 hours, they are successful. Okay? So why do we vacillate around the weekly pivot? Because buying the weekly pivot has worked. It's worked very well. And they're going to ride that horse until it bucks them. So, and what else has worked? Matching lows have worked. Matching lows have worked very well. Ask everybody who bought down 16, 17. So, the dip buyers are going to show up. They're going to defend 30. It's up to the bears to overcome that. The bulls, they've got to overcome weekly pivot now. They need to close above it. Bulls need to close up here. Bears need to close down here. All right, everybody have a good one. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.